Hi, I wanted to take the opportunity to maybe walk through a little bit of the Habitat for Humanity international financial statements. I think it's kind of important. Let's see, just close the door there. I'm recording this from home, so yeah, sometimes we pick up home noises. At any rate, um, the accounting, as I told you in my statements online in the course itself, the actual accounting for transactions and not-for-profits is very similar to what you're used to from intermediate accounting. So there isn't really a whole lot of need to go through detailed journal entries. We will take a look at some journal entries in governmental because it is different there. But I do want you to spend some time going through and making sure that you have read this particular statement so that, and if you have any questions, that you let me know about them. So first of all, these are the consolidated financial statements and the report of the independent certified public accountants and single audit reports. So this is going to contain three things: the consolidated financial statements, the independent auditor's report, and also a single audit report, which has to do with the fact that they get money from the federal government and they have exceeded a certain threshold of spending of that federal money in a given year, and it kicks in and requires that they prepare a separate audit of those funds. And this is for the years ended June 30, 2018 and 2017. Okay. Now, always kind of glance through the table of contents to see what's going to be included. Again, notice that they use the term consolidated statements of financial position, consolidated statements of activities, consolidated statements of functional expenses, and consolidated statements of cash flows. So the typical financial statements that you're used to seeing in a commercial enterprise as opposed to a nonprofit, these are a little different. The financial position, that's just the balance sheet. The statement of activities is simply the income statement. The statement of functional expenses is a different kind of statement. Remember, there's no statement of stockholders' equity here. No need for it because there are no stockholders. They don't have any owners. They're a nonprofit run by a board. And so their functional expenses basically shows where they spent their money. And it's a measure, it's an accountability measure for folks that need that information or want that information if they want to evaluate the, I guess, the responsibility that the company has followed in terms of spending other people's money. Then you've got the notes. The single audit reports have the schedule of expenditures of federal awards, the notes to that, and then reports of the independent auditors. Notice one is on internal control over financial reporting, and then the other one is compliance to major federal program requirements. And then they have a schedule of findings and question costs that will be attached. You can go right to the auditor's report. It should be fairly basic, but you want to take a look at the opinion. It says, in our opinion, the consolidated financial statements referred to above present fairly in all material respects the financial position of Habitat for Humanity International at June 30, 2018 and 2017, and the changes in their net assets and their cash flows for the years then ended, in accordance with accounting principles generally accepted in the United States of America. So when reading this, the first thing you should note is that there doesn't appear to be any qualifications. There doesn't appear to be any other explanatory information. However, they do provide another paragraph called supplementary information, and you should read that. Their audit was performed by Grant Thornton, LLP, which is a very large accounting firm. All right, so we come across here, we notice again, it's the consolidated statements. So what are we consolidating? Well, to know what we're consolidating, we should go to the notes. And so right here, it's going to tell us, after a little bit of an introduction, it says Habitat is comprised of the organization's headquarters based in Georgia, USA, so right here in good old Georgia, its area and regional offices worldwide, and the national organizations that are registered as branches of Habitat for Humanity. And then under the significant accounting policy statement, they talk about, again, in more specifics, what they're made up of. Now, they don't list all of the area and regional offices. You would have to go to their website to see that list. Um, then they talk about, and this I don't quite understand, it's worded oddly, 11 and 12 national organizations that are registered as part of Habitat for Humanity International. I guess that means that 11 as of June 30, 2018, 12 as of June 30, 2017. So somewhere along the way they lost one of their national organizations. And then they're made up of Habitat for Humanity Inc. and Habitat for Humanity Middle East, which are wholly owned subsidiaries. And then Microbuild One LLC and Habitat Microbuild India Housing Finance Company Private Limited. So they're a fairly complex organization. But again, you can read through all the notes, and these again are going to tie to the line items that are in the financial statements themselves. All right, so let's go back to financial position. Under financial position, we see that cash and cash equivalents. We've got, there's no statement here, so these are in actual dollars, so they're not rounding at all. So you've got $103,741,554 million, I guess, in cash there. That's a lot. 103, almost $104 million in cash. And that's a big jump over 2017. That's quite a lot of cash. Their investments at fair value have also gone up significantly. Receivables, pretty stable but increasing, it looks like, across the board. So they've got the receivables, the inventories have gone up. So there's definitely some things going on here. And you should be recognizing that when you go through here. Again, you can common size these statements, just like you were taught to common size commercial statements. You could common size these statements as well, for comparison over time and comparison with other nonprofit organizations. And then down here, remember, there is no equity section. We simply have total assets minus total liabilities equals net assets. And here we've got the unrestricted, controlling interest and non-controlling interest, and then we have temporarily restricted and permanently restricted. And remember, the difference between temporary restriction and permanent restriction is that temporary restrictions are time and purpose, and so that means that when time expires or when the funds are used for their intended purpose, they are no longer restricted. Permanently restricted are those funds that are given to the organization with a condition that doesn't allow you to spend the core amount, the original amount given, but you usually can spend the income that it generates. Okay, so that's the key difference there. Let's take a look at the statement of activities. Again, for the statement of activities, again, it's reported slightly differently than what you're used to seeing in a commercial income statement. We see here that there are columns for unrestricted, temporarily restricted, and permanently restricted, and then total. And so we want to know what's going on in each one of those columns in terms of what's available. So we have our contributions given, donated products, services, and advertising, government grants, and then other income. And there's probably a description in the notes as to what that other income comprises. And then the expenses, notice they go here by the program services. So you have your U.S. affiliates, your international affiliates, and then public awareness and education. And then the supporting services, fundraising, management, and general. Oftentimes people who are evaluating whether to give money to an organization will want to see the relationship between how much they spend to manage the organization versus how much is spent on the actual services or goods that they provide to the target audience or the target clients. And so that's an important distinction between a commercial enterprise and a not-for-profit. And then, of course, it reports the changes in net assets so that you can look at how well the company is doing. Again, because they don't track necessarily profit and loss, what they're doing is they're tracking the change in the net assets, which ties between basically the statement of activities and the statement of financial position. The statement of functional expenses is a new statement that you have not seen before unless you're familiar with nonprofits or not-for-profits. And so again, this just kind of breaks down the expenses. You've got by row, you've got program and house building transfers, donated products and advertising distributed, salaries and benefits, professional services, and so on and so forth. So the different types of expenses, and it's kind of who spent the money within the organization, the U.S. affiliates, the international affiliates, and then the public awareness and education program, and then they have total program services. Then again, because of the accountability issue, they show the fundraising and the management in general, and then they call it total supporting services. And so again, you could take this and turn this into a common size statement and actually look at the percentages, and then over time you could kind of track these over time to see how well the company, or this, in this case, the not-for-profit, is doing. And boom, consolidated statement of cash flows, much like a private enterprise. They have an operating section here, so they have net cash provided by operating activities, all of the different adjustments. Let's see, they have operating activities, so they're starting with the change in net assets. So that means we're looking at an indirect method statement here. Remember, in the past, you've been told that if you see a cash flow statement starting off with net income and then adjustments to net income, that's the indirect method. Well, if you were going by the letter of the law and you were just looking at this, you might not pick that up unless you were familiar with the change in lingo. So it becomes change in net assets instead of net income. So this is the indirect method. And then we've got our investing activities, okay, very similar to what we've seen in a commercial enterprise. And then the financing activities. Sorry about that. Okay, so not much different. And again, the accounting is not much different. So what I'm going to encourage you to do is to read through this and see if you have any questions. You're free to email me questions. If you email me a question about these statements or about any of the accounting involved, I will answer the question and post the question and answer on our Georgia View website for the benefit of everyone. So again, this is the first part of the course was on this not-for-profit accounting. And again, I didn't provide a whole lot of depth in terms of beyond what was covered in the workbook, because the accounting is so similar to commercial accounting, I really didn't feel that that was necessary. So what I'm going to be doing is putting together a similar screencast going over governmental accounting. First, we're going to take a look at the statements, kind of a 30,000-foot view of the statements, and then we'll be going ahead and taking a look at some of the journal entries and walking through the journal entries, because it is a different creature, and I suspect that some of you will have some difficulty with it. A lot of people do. I remember when I took governmental accounting, I took to it. It wasn't a big deal for me. However, it was for many of my friends and classmates. So I don't take it for granted that everybody will catch on to this maybe as quickly as I did. So at any rate, thanks for listening. I hope this is kind of helpful. Again, walk through this statement, read through it carefully, and look forward to talking with you about governmental accounting.